Trader evolution stages. In this video, you'll learn the stages of becoming a successful trader based on the conscious competence model, the unconscious incompetence stage, the conscious incompetence stage, the conscious competence stage, and the unconscious competence stage. The first stage is called the unconscious incompetence. You know that trading is a good way of making money because you've heard so many things about it and heard of so many millionaires. Just like when you first desire to drive a car, you think it will be easy. After all, how hard can it be? Price either moves up or down. What's the big secret to that then? Let's get cracking. All you have to do to make a profit is to buy low and sell high. Let me repeat this: buy low, sell high. But what do? You sell low and buy high. How many times has this happened to you? You buy and the market goes down. Unfortunately, as you take your place in front of the screen, you quickly realize that you have no clue about what you're trying to do. You take lots of trades and lots of risks. When you enter a trade, it turns against you, so you reverse and it turns again. You try to turn around your losses by doubling up every time you trade. You may have initial success, and that's even worse because you start to risk more. Sometimes you'll get away with it, but more often not. At this stage, you are totally oblivious to your incompetence at trading. That's how I started trading a long time ago in a galaxy far away. This is a nice game, but let's learn how to play it properly. And that's how I got into technical analysis and went to a seminar like you guys are today. So basically, you saw the door open and you came in. Stage 2 is where you realize that it's not easy money. There is more work involved in trading. You consciously realize that you are an incompetent trader and you don't have the skills or knowledge to turn a regular profit. The next thing you find yourself doing is buying trading systems and ebooks galore, reading various websites, watching YouTube, trying to search for the Holy Grail. During this time, you will be a system nomad. You'll be jumping from one method to another without sticking with one long enough to see if it actually works. Every time you come upon a new indicator, you'll be ecstatic that this is the one that will make all the difference. You will test out automated systems, play with moving averages, Fibonacci lines, support and resistance, and 100 other things, all in the hope of finding the magic system. So how many of you have a method? Trying also to become a top and bottom picker, trying to find the exact point of reversal with your indicators. You'll find yourself chasing losing trades and even adding to them because you are so sure you are right. How many of you have done that? How many of you are still doing it? The issue when you start searching the internet is that you will find so much conflicting information, you will not know what to use. You'll then reach the point where you think, all the traders who say they are making profits are all liars. They can't be making that amount because you've studied and you don't make that. You know as much as they do, but are still losing. You will be like a teenager. Successful traders will freely give you advice, but you refuse to listen because you're stubborn and think that you know better. This stage can last ages and ages. In fact, and as my personal experience confirms, it can easily last well over a year and nearer to 3 years. This is also the stage when traders are most likely to give up through sheer frustration. How many of you feel you are in this stage? Towards the end of stage 2, you realize that it's not the system that is making the difference. You realize it is actually possible to make money with a simple moving average, and only if you can get your head and money management right. When the trade turns bad, you don't get angry because you know in your head it isn't your fault. As soon as you realize that the trade is bad, you close it. You stop looking at trading results from a trade-to-trade perspective and start to look at weekly figures, knowing that one bad trade does not make a poor system. I might have 10 losing trades and 5 winning trades over the week, but I end making money because the 10 losses I make are small and the 5 wins I make are big. Now you are aware that the trading game is about one thing: consistency of your edge and your discipline to take all the trades, no matter if the probabilities stack in your favor. Proper money management, leverage, and risk of account is what you focus on at this stage. Let us go over 2 scenarios and illustrate how leverage works. In the first scenario, let us suppose we made an initial deposit of €10,000 with a leverage choice of 100 to 1. This gives us a trading capital of €1 million. If we buy €1 million to US dollar at the price of 1.1300 and sell €1 million to US dollar to close the position at 1.1400, we will make a profit of 100 pips or $10,000. This means we almost doubled our money. In the second scenario, with an initial deposit of €10,000, with a leverage choice of 100 to 1, this gives us again a trading capital of €1 million. Again, we buy euro to US dollar at 1.1300, but this time the price goes down and we sell to close our position at 1.1280. We lost 20 pips on this position, or $2,000. We lost almost 20% of our investment. And do you know that the euro moves on average 100 pips every day? That means you could double your money every day. Or, what you are more used to, lose all your money in one day. The maximum you can lose is the amount you put in the account. Margin call. You know it. But the wonderful thing is that the profits are unlimited. There is nowhere in the world another job where you have fixed risk and unlimited profit potential. So leverage is a very good thing, but you have to learn how to use it. For example, our fund makes 20% with average leverage of 1 time. Imagine if you leverage more. At this stage, you're making trades whenever your system tells you to, and you take losses just as easily as you take wins. You now let your winners run to their conclusion fully, accepting the risk and knowing that your system makes more money than it loses. And when you're on a loser, you close it swiftly with little pain to your account. Day in, day out, you break even at minimum now. Some weeks you make big money, and other weeks you lose big money. But overall, you are not losing money anymore. You are now conscious of the fact that you are making calls that are generally good. You join a trading room and you are getting respect from other traders that you chat with. You still have to work at it and think about your trades, but as this continues, you begin to make more money than you lose consistently. Towards the end of this stage, you will slowly begin to make consistent profits week in and week out. Now you have a method, and you are using proper money management, and wow, you are making some profits. At the beginning of stage 4, you start to read books on the psychology of trading and identify with the characters portrayed in those books, and finally reach the eureka moment. The eureka moment came the moment you realized that you can't accurately predict what the market will do. No one can be 100% accurate, but you don't have to be a profitable trader. This eureka moment causes a new connection to be made in your brain. Because of this revelation, you stop taking any notice of what anyone thinks, what this news announcement will do, and what that event will do to the markets. You become an individual with your own method of trading. You're starting to get happy, and you define your risk threshold. The end of stage 4 is where I am. Now we're cooking. Just like driving a car, every day you get in your seat and trade. You do everything now on an unconscious level. Like when you drive, do you think, start the car, put the neutral gear, turn the car on, change gear? You do it all on an unconscious level. You're running on autopilot. You start to pick the really big trades, and getting big profits in a day doesn't make you any more excited than getting none. This is trading utopia. You have mastered your emotions, and you are now a trader with a rapidly growing account. You're a star among your trading community. Your method of trading doesn't change, it just gets better. You now have what women call intuition. All the time you are sharpening your method, trying to extract the maximum profit from the market without increasing risk. Trading is no longer exciting. In fact, it's probably boring you to pieces. Like everything in life, when you get good at it or do it for your job, it gets boring. You're doing your job, and that's that. And that's when you start teaching. So which stage are you at? Around 60% of new traders quit in the first 3 months. They give up, and this is good. Think about it. After all, if trading was easy, we would all be millionaires. Another 20% keep going for a year, and then in desperation take risks guaranteed to blow their account, which of course it does. What may surprise you is that the remaining 20% will last around 3 years and reach stage 3, where they will think they are safe. But even at 3 years, only a further 5 to 10% will go on to actually reach stage 4 and make money consistently. By the way, these are real figures, not just some I've picked out of my head. So when you get to 3 years in the game, don't think it is plain sailing from there. Ask yourself the question, how many years would you go to college if you knew for a fact there were $1 million a year job at the end of it? For example, you are a doctor, yes? How long would you study to become a doctor? If I told you I saw a video on YouTube and read an ebook, would you let me operate on you? Would you say yes? So to become a successful trader, you need to go through all the 4 stages. In my 20 years, I have taught more than 35,000 traders, and as we saw, only 5% makes it. Do you want to know who were the most successful ones? What common characteristic they all had? There is only one characteristic that emerged as a significant predictor of success. Only one. Can you tell me what it is? Do you think it was good looks? No. Do you think it was their education level? No. Do you think it was their physical health? No. Do you think it was their EQ, their social abilities? No. Do you think it was their IQ? No. But first, have you heard of Mozart, Michael Jordan, Bill Gates, Albert Einstein, Jesse Livermore, Warren Buffett, George Soros, William Gann, Avramis? What do they have in common? Many people will answer talent, and that's partially true, but it's actually only a fraction of what really went on. What all of those people actually have in common is that they spent way more hours practicing, researching, learning about that thing they wanted to achieve. They did this more than all average people do, despite many setbacks. Did you know that Michael Jordan was cut from his high school basketball team? Did you know that Einstein was called the dummy of the family when he was young? George Soros once worked as a railway porter and as a waiter, and once received 40 pounds from a Quaker charity before amassing his billion fortune. Warren Buffett was rejected by Harvard, and he said that was the most pivotal moment of his life. But here's a deeper question. What led them to keep trying and not give up, and to put that much effort in to begin with? It was their grit. Their passion and perseverance. Grit is passion and perseverance for very long-term goals. Grit is having stamina. Grit is sticking with your target day in, day out, not just for the week, not just for the month, but for years, and working really hard to make that future a reality. Grit is living life like it's a marathon, not a sprint. Alex Garden says, there's no magic. It's practice, practice, practice. To be successful, put your nose down in it and get damn good at it. And it's a focus. Norman Jewison said, I think it all has to do with focusing yourself on one thing. And push. David Gallo says, push yourself, physically, mentally. You've got to push, push, push. You've got to push yourself through shyness and self-doubt. Goldie Hawn says, I always had self-doubts. I wasn't good enough. I wasn't smart enough. I didn't think I'd make it. Now, it's not always easy to push yourself, and that's why they invented mothers. Frank Gehry said to me, "My mother pushed me." So it doesn't matter what kept you going, but you have to keep going. How do I build grit in traders? How do I keep them motivated for the long run? The honest answer is, I don't know. What I do know is that talent doesn't make you gritty. Data show very clearly that there are many talented individuals who simply do not follow through on their commitments. In fact, grit is usually unrelated or even inversely related to measures of talent. What I know works is having a growth mindset. This is an idea developed at Stanford University by Carol Dweck. Simply put, it is the belief that the ability to learn is not fixed, that it can change with your effort. If you have clear in your mind and you believe failure is not a permanent condition, they're much more likely to persevere when they fail and become successful traders. So let us see the difference between a fixed mindset and a growth mindset. For example, if a person thinks their intelligence, talent, and abilities can't be significantly improved, it means they have a fixed mindset. I'm not a math person. I'm not a natural athlete. I'm not good enough. I am not a good trader. We already know about the incredible power of our brain to learn and change. An alternative way of thinking is that our intelligence, talents, and abilities can be developed with efforts, right strategies, help from others. This is called a growth mindset. I can learn about math. I can develop my athletic skills. I can develop my intelligence, talents, and abilities. I can achieve great results with practice. I am not a good trader yet. So the growth mindset way of thinking is a better reflection of reality. I heard about a high school in Chicago where students had to pass a certain number of courses to graduate. If they didn't pass a course, they got the grade, "Not yet." And I thought that was fantastic, because if you get a failing grade, you think, "I'm nothing, I'm nowhere." But if you get the grade, "Not yet," you understand that you're on a learning curve. It gives you a path into the future. Just the words "yet" or "not yet," we're finding, give kids greater confidence, give them a path into the future that creates greater persistence, and we can actually change our mindsets. Every time you push out of your comfort zone to learn something new and difficult, the neurons in your brain can form new, stronger connections, and over time, you can get smarter. No matter where a trader is now, they can always improve. With effort, good strategies, and help. With this seminar today, I will take you to the end of Stage 2 in 3 hours. Although you've probably committed more time and money than you ever thought you would by now, hold on and don't give up yet. One day, in a split of a second, you will enter Stage 3. Do you know how to move to Stage 3? Watch our video guides and read our ebook available in XM Members area very soon. You attend the full webinar courses that we deliver at XM more than once. They are structured and have the correct gradient. Learn our tools and use their signals. Join our trading room, tradepedia.com. Give me 20% of your profits, smiley face. Remember when you first start to learn, we have kindergarten, then junior school, high school, university, master's, PhD, Avramis. In the later 1960s, Stanford psychologist Walter Michael performed a test on children demonstrating the significance of delayed gratification known as the marshmallow experiment. Preschoolers were given a marshmallow and promised another, but only if they could wait 20 minutes before eating the first one. The marshmallow test. What makes successful kids? What is the one test that correlates with success in life? You give the kids a marshmallow now and tell them they can eat the marshmallow now, or wait an hour and receive 2 marshmallows after an hour. The kids that wanted the quick kill, that didn't want to wait, they grabbed the marshmallow and ate it. The other kids that could delay gratification and wait to receive 2 marshmallows later on, when tracked after years, were found to have been more successful later on in life. Thank you for watching.